Everybody by now knows my opinion on the stock market, right? I have a lot of money invested in the stock market, but I am not putting much money at all in the stock market recently. I feel like, to be quite frank, the stock market is not a very good deal considering everything we have to work through. I've been very clear about that. Everybody knows that, but I'm getting a lot of questions now about, okay, well, your businesses are still producing money. You're still receiving dividend payments and things like that. So the question is like, where are you putting your money? Where have you been putting your money in 2020? And so I thought, let's just do a full video, and I'm going to open up about a lot of personal things and exactly what is going on and what I am doing personally with my money this year in 2020. What exactly I'm doing, okay? And, I'm spending it a lot on buying people six-figure club awards because, my goodness, everybody's hitting six figures now. The stock market keeps going up. So I'm spending all my money on that. And then, of course, my hat collection. Got to spend some money there, okay? No, that's just to be funny, okay? So, real question is, what am I doing with my money? Hope you guys enjoy this. As always, I don't do that many videos like this anymore nowadays where I talk about, like, me personally and what I'm doing with my money and things like that. So, hope you guys enjoy it. I haven't done one of these in a while, and smash a thumbs up if you do, okay? So 7 things I have been doing with my money over the last number of months, okay? Number 1, I bought a house in Arizona. It's being built right now. I think it will be done probably in the fall time or maybe the winter time. It takes a while to build it. And in terms of this house I bought in Arizona, like, why did I buy a house in Arizona? Well, a couple of reasons, okay? One is diversity of wealth. So I didn't own a lot of real estate as of buying that house. I only owned essentially one house, the house I'm recording this video in right now, okay? So I was looking to diversify wealth because so much of my money is tied up in the stock market. So I'm just kind of looking to build out like a real estate portfolio, maybe, own, several properties, something like that. So this is going to be like a second home, and it's also going to be a recording studio. So we have a lot of family in Arizona, and we go to Arizona many times a year, like probably 5 to 7 times a year we go to Arizona, and usually it has to be such a quick trip because I got to get back because I got to record videos, and I, love to do what I love to do, and I can't do that obviously in Arizona because I don't have a recording studio set up or anything like that. So the idea is essentially with that new house that's being built, use that not just as a place to get away for a couple of weeks and go hang out with family and stuff, but also be able to still work there and actually have a recording studio there. And I think I can actually get the tax write-off on 2 properties then at that point, which will be kind of nice. But those are the 2 biggest reasons by far and away: diversify my wealth and also use an Arizona property as a recording studio where I can go out there for 2-3 weeks at a time and spend some time there, okay? I'm also looking for a very nice price appreciation over time. I think I'll get somewhere between 50% and 100% price appreciation on that property by 2030, okay? It is a property that's in a guard-gated community, and it's one of the only, if not the only, like, guard-gated community actually on the west side of Arizona. There aren't many of them, needless to say, and that might be literally the only one. So I believe I would get very nice price appreciation over time. We know Phoenix metro population is just continuing to boom, and I don't see that honestly slowing down anytime soon. You go back just to like 2009-ish, there's like 3.5 million people that live in Phoenix metro. Now there's about 4.5 million people live in Phoenix metro. There's added a million people in about 11-year span, and that number will continue to increase in future years. Why is this? Well, housing is really affordable in Phoenix. Very modern housing. More and more jobs are being created in Phoenix. A lot of folks from California, kind of flee California over time because California is just very expensive. And so where do most people that flee California go? Most of them end up either in Vegas or they end up in Phoenix. Those are the 2 biggest markets, and some actually go out to Texas and move out to Dallas, and that's where a lot of the California folks go. And so in terms of the population, it will continue to boom for, probably decades to go in the future when it comes to Phoenix. That's not slowing down anytime soon. So I'm super excited about that one. I'm super excited to have a second recording studio and somewhere where I can just work out of in Arizona for, maybe let's say 2, 3, maybe 4 months a year. So looking really forward to that one, okay? Number 2 thing, I wouldn't usually add a car to, something I spent money on, but, Model X's are pretty dang expensive. So I did buy a Model X. I think that was January. I bought a Model X, I believe, and I can't even show you guys a picture of it right now because it's literally getting wrapped, okay? I'm getting it wrapped right now as we speak. and I think I'm picking it up tomorrow, I believe. So looking super forward to that. I'll post pictures of it and videos of it once the wrap is finished tomorrow on my IG. So if you don't follow me on IG and you care to see that or anything else from my lifestyles type stuff, definitely go ahead and follow on there, okay? Third thing I've been doing with my money lately is I bought 6 figures of stocks in the month of March. And you know, I will say I didn't buy enough. I'll be quite frank with you guys. I didn't put nearly enough money into stocks in March. I could have put way more. I had way more money to put in stocks, and I just didn't put enough. I should have bought more, but you know, hindsight's always perfect. But at the end of the day, I didn't know things were going to bounce back as quick as they did. I mean, it was incredible how like short term that dip really was when you look back at it. It was really like a 3-week dip in terms of when the market actually dipped big, right? It was incredible how fast it went down and how fast it came right straight back up. And it hurts me to look at that stock chart because I'm like, I should have bought more. I should have dang bought more, but it was just, I mean, you know, when you kind of have something like that happening, you figure, okay, you know, we can add to positions over time. You know, we're gonna have a few months to kind of get in, and this was just ridiculous. I mean, it literally went down in like a straight line and up in almost a straight line. It was incredible, but you know, it is what it is. I still got to buy a lot, but the Fed got so involved with that, the U.S. government, you know, backstopping everything. Let's buy, you know, all the bonds, and let's just, you know, try to make as few companies go bankrupt as possible. And this, you know, the Fed balance sheet, increased $3 trillion plus in a matter of a few weeks. You know, it was extraordinary. It was flat out extraordinary. And, you know, I couldn't have predicted that the Fed would have gotten that involved. Like, you know, that's crazy, man. $3 trillion plus added to a balance sheet in a matter of just weeks. You know, it was a crazy situation, and I wish I would have bought more. I'll be completely honest. And obviously, everybody that had, you know, a little extra money on the sideline looks back at that time and wish they all would have went all in, right? You know, I never go all in, but I definitely could have went heavier on the market, okay? Fourth thing I've been doing with my money is I bought, you know, about, I don't know, probably between $40,000 and $65,000 worth of stocks in April, somewhere around there roughly. Some of them I actually documented on the channel, and I also bought, I think USO it was, in April, and made some very nice profits on that one. April was kind of a month for me where I had a few positions here and there, but the market had already been going up a lot, especially in the back half of April. So it kind of pushed me away a bit from, you know, buying more, let's say, certain stocks out there. And so, you know, at the end of the day, I'm kind of, you know, happy I bought some in April, but, you know, I'm not going to pay overvalued valuations for a lot of stocks. And in the back half of April, some stocks started getting very richly valued and have continued to get even more overvalued, okay? The fifth thing I have done with my money recently is I bought a new house in Vegas, okay? It's a new build also. That one's a beast, okay? I'll be completely honest. It's going to take like 1 to 2 years to be built. It's not going to be done anytime soon. You know, it's going to be quite a place. I don't want to hype it out yet. You know, we'll wait for the time to come. But, you know, looking super forward to that. Why did I do that? More diversity of wealth. This will now allow me to control roughly $3 million of real estate, you know, maybe a little under $3 million of real estate at today's current prices. So that allows me to really diversify quite a bit because I have so much money in stocks that, you know, now having, you know, roughly, let's say $3 million of real estate I control, that's just a big thing for my overall diversity of wealth, you know, because, you know, and I usually kind of suggest if people are super heavy on real estate, buy some stocks, like diversify your wealth. And it's funny, you know, I know, you know, I'm not going to mention any names, but I know people personally on the YouTube platform that, you know, are more real estate people, and they've been buying stocks really heavy. And here I am, the stock guy, and I've been buying real estate really heavy. So, you know, things are all confused in this world. You know, you got the stock guys buying real estate, you got the real estate guys buying stock. What in the world is going on, okay? But at the end of the day, I have to diversify my wealth more around than what it has been essentially. It's no different than you look at a stock market portfolio, right? You could have all your money in one stock, two stocks. It's usually not the best decision. It's usually best to hold 5, 10, 15 great companies because there's a lot of opportunities in the stock market. It doesn't make sense just to kind of hold one stock or two stocks or something like that. And especially if you have a lot of money behind you, that's just crazy to be that under diversified. It's just not a good position to be in, okay? So looking forward to that. 2, I think I'm gonna get huge price appreciation on that one over the next 10 years. I think that one I'm gonna probably easily make a 75% to 100% gain over the next 10 years on that particular property. I think that's the one. That's the one property that I'm like, I'm gonna smash it on this one. In my personal opinion, it's gonna be, you know, my 3rd property in total that that I've bought, and I think that will be the one that I'll just make some crazy money. So I'll have the biggest house in the community and probably the nicest house, and I'm going to be in it for about 1.5 versus most of my neighbors are going to be in theirs for 2+. I was kind of able to get in before a lot of other people were able to get in. I was able to negotiate some things, and I just foresee, like most people in that particular community, it's another guard gated community, I think most of them will be in for 2+, and some of those people will be in for 3+. And here I am going to be in it for roughly 1.5. So I think I'll get very nice short-term price appreciation. And one of my things I always like to do when I'm thinking about potentially adding more properties, and not just now but down the road, is I like to really buy into communities where it's kind of like the top 1% of income earners that would really buy into these certain communities. And the reason I like to do that is because at the end of the day, these type of folks, they have money no matter what, right? Let's just say you make, normally you make 10 mil a year, right? Let's say a recession comes out of nowhere and it slaps you, and you say your income falls 50%, which would be rough, right? You still make 5 mil a year. You're still doing just fine financially, right? And so that's why I kind of like to play at the high end of the market, right? It's no different than, why do I always buy Wynn Resorts if I'm looking to buy a gaming play? Well, Wynn Resorts plays on the very high end. Their clientele are the VIPs, right? The people that, they have money no matter what. They're not at jeopardy of losing their job or something like that. People like that have a ton of money behind them, and no matter what, they're always doing good. No matter which way you look at it, they're always doing good. It's just a question of how good are they doing. And so that's why I personally like to kind of buy in some of the more expensive areas. And it is also all about location, which is also huge, okay? Now, just in terms of Vegas in general, I think all properties pretty much in Vegas will go up over the next 10 years, but especially in the particular location I'm buying in. The population of Las Vegas metro area is going to continue to boom for many of the same reasons why Phoenix booms. People move here from all across the United States that just are looking for a place that housing's affordable, that doesn't have those brutal cold winters like some of the people back east, right? That are just sick of going through those 0-degree winters with the snow that's up halfway up your door when you open it. A lot of people just want that sunshine and that beautiful weather, okay? And yeah, it is hot during the summer. There's no doubt about that, but the rest of the year, it is gorgeous. And so that just attracts people. The population will continue to build and build and build. And also, this is going to be the closest guard-gated community to a high school named Bishop Gorman. This is a private high school. So, anybody in real estate will tell you it's all about the location. In terms of if you're thinking about price appreciation over time, and being that this will be the closest guard-gated community to a private high school in which everybody that really has money in Vegas sends their kids to, okay? This is a big thing, okay? This high school, if you have money, you send your kids to the private high school named Bishop Gorman, okay? And I think they won 3 or 4 national championships in high school football as well. They got this crazy sports program. They recruit kids from, I don't know, all over the United States. It's insane. And so if you live in really nice communities, let's say you live in Seven Hills, you got a beautiful, mansion in Seven Hills or something, those people, they send their kids to the private high school, which is Bishop Gorman. That's where they end up sending. You live at Anthem Country Club, you're sending your kids to Bishop Gorman when they go to high school. Red Rock Country Club, the Ridges, those particular, guard-gated communities, you're sending your high school kids to Bishop Gorman, okay? You live in McDonald Highlands, you're sending your kids over there. So ultimately, and by the way, that school is very expensive. Yearly tuition, there's $12,700. Imagine that. You pay $12,700 for your kid to go to high school. I mean, we're not talking about college, we're just talking about high school. But man, people got plenty of money and they do it. They just do it, okay? And so that particular private high school, it's the only big dog private high school in Vegas, and it's a beautiful campus. I've been to it personally. It's unbelievable. It is, and it's for high school, it's ridiculous. It's way nicer than most colleges. Let's put it that way. As a matter of fact, I've definitely never been on such a nice high school campus in my life. But then again, if the students are being charged $12,700, well, I should say the parents are paying $12,700 a year to send their kids there, I can understand why that campus is so beautiful. And so, when you're thinking about real estate, you really got to think about the schools that are around there, because the fact is a ton of parents care so much. They care so much about where they send their kids to high school in the end. And I think, to be around those type of schools is going to be, a big thing over time, because a lot of parents, drive their kids, from a far community all the way over to that high school, and now they're going to look and they're going to say, well, I could live over there, have a nicer house than I had over there, and be much closer to where my kid actually goes to high school. Maybe that's an attractive place. So ultimately, at the end of the day, I think that house is going to be a big money maker. Let's put it that way, okay? Number 6 thing I have been doing with my money is putting it in online savings accounts. Now, why online savings accounts? Well, you just get a lot better return than any other savings account out there. Let's put it that way. I mean, you look at some of these, Capital One, Marcus by Goldman Sachs, which, by the way, Goldman Sachs used to focus on the very high end of the market. Goldman Sachs continues to kind of go after everybody as a customer. Goldman Sachs now is really starting through their Marcus products. Really, they want everybody as their customer. Now, you get like 1.3%. I didn't even know American Express actually has a personal savings account. You get 1.3% on that. Ally Bank obviously is a very popular one. I think Ally Bank right now is paying 1.25%, if I recall, on savings accounts. So at the end of the day, just setting up an online savings account is a phenomenal plan if you have some cash around and you're looking to try to keep up with inflation. You're not going to keep up with inflation getting 1.3%, but at least will help a bit. And getting 1.3% is better than getting 0%, right? At the end of the day, like, it just is. And it's way better than the traditional banks. You look at something like Chase Savings, and you could look at Wells Fargo, Bank of America, all the big dog banks. So many people have savings accounts set up through these guys, and I can tell you, it's just usually a big mistake. It usually just is. You're not getting anything. You might as well just have your money in your checking account. It's just worthless. Like, look at Chase. 0.01% rate is what Chase pays, okay? That means if you got $100,000 in there over the course of a year, you're going to make 10 bucks. 10 bucks on 100K in that savings account is completely worthless. Let me be very clear about this. It's completely worthless to keep money in a savings account with any of the big banks because they're not getting anything. If you're going to save money and you want some cash saved somewhere where you can still access it right away if you need to or if you want to, for me, access is so important because I don't want to have to wait, a bunch of days or a week or several weeks to get a hold of my money. I want to be able to access it right away, get that money, transferred over to a brokerage account. Let's say the stock market, let's say there's a stock I like that falls 20% or 25% tomorrow. I need to get to my money right away. I don't want to wait, a week or something like that. So I can understand why a lot of folks want to have savings accounts, but if you do, usually just set it up through one of the online guys, somebody trustworthy that's got a big name behind them that's going to pay you at least 1.3% or something because you're just going to make more money. It's just like, do you want to make more money or do you want to make less money? It's really your call at the end of the day, okay? And the 7th thing I've been doing my money is I've just been keeping some money in my different brokerage accounts. I have like 7 different brokerage accounts and I've just been keeping some money in them, to be quite frank. Like, I've been getting a lot of dividend payments. Some of my companies cut their dividends, but I still have a lot of companies that still pay me out dividends almost every month. And along with the fact that I've been taking some nice profits in the stock market over the past couple weeks, like for instance, the public account, right? I got just $34,000 just chilling in there right now. I don't really have a plan for it at the moment. I'm kind of waiting for some things to kind of happen in the market or to get some more confidence about how the economy is going to do or things like that. So I got 34K just chilling in there at the moment. I got one of my private accounts, I have like 45K just literally just chilling there, just collecting dust right now. It's just getting a little dusty, but it's just sitting there at the moment. And that money's ready to go. When I feel like there's a really good deal, when I see something out there and I like the opportunity, I'm going to go ahead and I'm going to deploy that money out there and I'm going to use it. But the fact is, I have just been keeping some money in my different stock market accounts, and that's pretty much all my stock market accounts right now. I got just money in all of them, just sitting around, waiting to get deployed. And at some point, I will. Okay, I will tell you guys, I will start funneling tons of money in stocks again when I feel like pricing is appropriate. Okay, when I feel like either the economy is getting to a place where it's showing a lot of strength and I have a lot of confidence that things are going to get right back on the right track. Corporate earnings are going to get right back on the right track or something like that. Or if we have another scenario where the stock market dips huge again and I can basically buy off hope, I have no problem with buying off hope as long as I'm getting a really discounted price. But as we were looking at the other day, the NASDAQ's up, what was it? I think it was 23% in the past 1 year when we looked the other day. S&P 500 was up like 6.5% in the past 12 months. I'm just in a position where I'm like, I already got so much invested in stocks that I'm not going to pay overvalued valuations and buy off hope. At the end of the day, I will buy when buying makes sense, when valuations make sense, when forward Ps make sense, and when I can see a clear picture out there, or when I'm getting super discounted prices like we were getting in March. You give me super discounted prices, stock market drops 20% tomorrow. Believe me, I'm going to be sticking a whole lot of money. I'm going to be coming out with a video saying why I just bought $100,000 worth of stocks today, okay? But outside of that scenario, I'll continue to play it how I'm playing it. But there will be a day, don't worry, when I'm buying tons of stocks again. We just gotta, I'm just at that point right now where it's like, okay, let's see how things happen. Let's see how this economy opens back up. Let's see how corporate earnings do. Do they all come back strong? Do, some of them remain weak for a while and things like that? So, but yeah, there will definitely be that day again when, it's all about 3 stocks I'm buying and, I just put $50,000 in the stock. There will be that day again. But, at the moment, at least, it's not that time. So hope you guys enjoyed this. It's me sharing, basically a lot of personal finance type stuff on what I'm doing with my life. Like I said, I don't do a lot of videos like this anymore, but I hope you guys, appreciate it and at least enjoyed it. All right. Thank you for watching and have a great day.